Peter, talking about these high-level concepts, which again, I'm sure at this level, the first two, most people will at least have a passing familiarity with, but worth reminding.
Yeah. So the big picture idea is that in the US, at the federal level, there are essentially two layers of transfer taxes when you transfer wealth. And so the sort of first layer is the estate and gift tax layer. And so that's a 40% tax. It applies to people who are above the estate and gift tax lifetime exemption amount, which is currently about $14 million per person. And so for the sort of higher net worth crowd, a lot of them are at least familiar with the fact that if they die and their assets are over 14 million, there'll be some amount of estate tax on the excess above 14 million. And if they make gifts during life, if they make more than $14 million of gifts, there'll be gift tax. And the gift tax and the estate tax are essentially an integrated tax, why I talk about it as a single layer. The more gift tax exemption that you use during your lifetime, the less estate tax exemption you have available when you die. And the less gift tax exemption you use during your lifetime, the more estate tax exemption you have available when you die. And so that's layer one, and it's a layer that most people are familiar with. There's actually a second layer, which isn't as well known, called the GST tax. And it's essentially a separate 40% transfer tax. And it applies to gifts to people who are more than one generation below you. And so it doesn't target gifts to your children. If you just left everything to your children outright when you died, you wouldn't have any GST tax. It's specifically targeting situations where either you're leaving assets to your grandchildren or great-grandchildren, or you're putting assets into trusts where your grandchildren or great-grandchildren could eventually be beneficiaries. And so that's what it's going after. And it's very important just because it's essentially a second 40% tax. So if anyone's trying to set up a dynasty trust or somehow transfer assets to their grandchildren, the real tax rate isn't 40%. It's, depending on how you calculate it, maybe 64%, 40% plus an additional 40% on top of that.
So we're gonna get to this, but just I think maybe at a bit high level before we get into the nuances of the rules. In what circumstances do families typically come up against this? What's the common posture here where this arises?
So it almost always comes up when people are over the estate tax exemption amount. Whether they think about it or not, the GST tax and the gift and estate tax have the same exemption amounts. They're parallel exemption amounts. So you could potentially use all of your gift and estate tax exemption without using any GST exemption. But there are parallel exemption amounts. If you're running up against the estate tax exemption amount, which is about 14 million, that means you're also running up against the GST tax exemption amount. Mm-hmm. So it's anyone with an estate tax problem, whether they know it or not, has a GST tax problem, unless their plan is literally just to leave everything outright to their children, which generally doesn't make sense anyways. Mm-hmm. So it's almost always an issue.
Got it.
For people who have an estate tax issue already.
Yeah. Okay. You want to dig into this slide here?
Yeah, actually, before we do, I think in the past, I've noticed it's helpful to give a little bit of background on the history of these taxes to understand why they exist and what they do. And so actually going back to the slides. So the estate tax is the original transfer tax. It applies to assets that you own when you die. It's a 40% tax. It was created about 100 years ago. After it was created, people started making gifts before they died to their family members as a way of avoiding owning assets when they died, because they said, okay, if the estate tax is only applying to assets that I own when I die, I can just gift the assets when I'm 80 to my kids, and then there won't be any estate tax until they die. And so in the 1920s, Congress instituted a gift tax to close that loophole. But eventually people realized that there was actually a second loophole, which is that if you give assets to your grandchildren instead of your kids, or at least if you give some of your assets to your grandchildren instead of your kids, you're able to skip one layer of gift and estate tax. Because normally if you give everything to your kids, when your kids die, they owe estate tax on whatever they own. And so they're paying a 40% tax on that amount. But if you give everything to your grandkids, then there's no tax when your children die, which means your grandchildren are getting everything with only one layer of tax being paid. And so Congress wanted to fix this so that everything would have to go through 2 layers of essentially estate tax by the time it got to the grandchildren. And so the solution in 1986 was the GST tax, which makes it so that, at least in theory, whether you give assets to your grandchildren directly or leave assets to your children who then leave them to the grandchildren indirectly, you're still paying the same amount of tax roughly. And so it's not a loophole to leave assets to your grandchildren.
Yeah. Interesting little side note. And what we do often touches on the political, and of course we don't want to make it, but it's interesting to me, it just as a student of history, that the last round of kind of beefing up of this idea was in 1986 at the height of the Reagan administration, when maybe you wouldn't necessarily have expected that sort of.
Yeah, there's more. So Democrats were in control of Congress, and they were passing a big tax reform measure that was viewed as tax simplification and like fixing loopholes bill. And so it made a ton of changes that were viewed as bipartisan, kind of good governance type things.
Yeah.
There's actually an earlier version of the GST tax from the 70s that literally didn't work. And so it was repealed, but it was this idea of creating a GST tax had been in the makings for a long time, and it just hadn't been implemented yet.
It's quaint that a simple gesture to bipartisanship and good governance was enough to get something done in DC in 1986. But here we are.